Bitcoin is down almost 50% from its all-time high. I'm not going to pretend that didn't happen. I'm not going to skip past it. I'm going to show you exactly why it doesn't change a thing. My name is Simon Gerovich. I'm the CEO of Metaplanet, and we're building Japan's Bitcoin standard. Over the past 20 months, we've transformed in scale, structure, and ambition. I'll walk you through what we've built, why Japan specifically, and where we're headed next. I don't need to explain Bitcoin to this room. 99.99% uptime, 21 million hard cap, no central issuer. But here's the framing that matters. Bitcoin is absolute. Its supply is fixed. What's volatile is the human opinion of it. Sentiment, fear, and greed. The price is just the market's mood at any given moment. Bitcoin is the constant, and nowhere is that more significant than in Japan right now. Japan just held a snap election with the most overwhelming mandate in post-war history. Fiscal impulse is coming. Rearmament, infrastructure, industrial policy. There is renewed political will and clarity of direction. And yet, 240% debt to GDP, the highest of any country in the world. 10-year JGBs at 2.2%, decade highs. Inflation above 3% for the first time in 30 years, and $7 trillion in household financial assets sitting in cash, waking up to a debasement risk for the first time in a generation. Japan is no different from the rest of the G7. The math is the same everywhere. Japan just got here first, faster, and at greater scale. So how do these situations resolve? Growth is unlikely with Japan's demographics. Austerity is politically toxic. Default is off the table in a fiat era, and nobody wants hyperinflation. That leaves financial repression, the rational choice, the path of least resistance. Inflation runs persistently above interest rates on cash, and debt to GDP falls not through repayment, but by inflating the economy. This is a well-known scenario, and it's playing out across the West right now. So what are the consequences? A tidal wave of capital from an economy of habitual savers is venturing out for the first time in decades into government bonds, into money markets, into equities, and into alternative monetary assets, gold and Bitcoin. This is the environment that Metaplanet was built for. This is from our white paper dated May 13, 2024. Acquiring Bitcoin through the issuance of long-dated yen liabilities, utilizing the entire range of capital market instruments, harnessing Japan's global capital cost advantage. 9 months later, Strategy issued the world's first Bitcoin-backed perpetual preferred, what is now referred to as digital credit. And this was our thesis then, and this remains our thesis today. Real rates in Japan remain negative. The spread between our cost of capital and what Bitcoin has historically returned remains extraordinary. And the opportunity in front of us is as large as the day we started. And speaking of what hasn't changed, let me show you something about Bitcoin itself. There are two ways to value this network. Market cap is simple. Take the circulating supply and price it at the last trade. This gives you roughly $1.5 trillion, down significantly from the all-time high. But that captures human sentiment at any given moment, fear, greed, narrative. And for a decentralized asset with no central authority, price always overshoots on the upside and the downside. Realized cap is different. It values every coin at the price it last moved on chain. Long-term holders are valued at what they paid, not what the market is feeling today. And look at how realized cap behaves. It moves like a step function. It consolidates and then appreciates. Almost none of the volatility you see in the spot price. Market cap drawdown from all-time high, 48%. Realized cap drawdown, just 2%. 2%. What that tells you is what long-term holders already know. A $1 trillion decentralized monetary network is bootstrapping in real time. No one steering the ship, no central committee, no policy intervention. And yet, the underlying economic reality of the network is essentially at all-time highs. Bitcoin's price is volatile, but its fundamentals are not. And that's the distinction and the foundation of everything that we do. Now let me show you what we've built on top of it. The orange line is Bitcoin's price since we adopted the Bitcoin standard in April 2024, roughly flat. The white line is Metaplanet's Bitcoin per share, up 5,000%. That gap is the entire argument for a Bitcoin Treasury company model. We grow Bitcoin per share by issuing equity and fixed income intelligently, deploying into Bitcoin, and repeating. Every financing decision that we've made, how we've structured it, when we executed, how we communicated it, has been in service of that singular objective: increase Bitcoin per share. Here's capital formation at scale. For us, 2024 was proof of concept. We raised $130 million, a shareholder rights issue, and our first experiments with moving strike warrants. We were learning what we could accomplish in the Japanese capital markets. 2025 was transformational for us. $3.25 billion, 25 times the prior year. We executed Japan's largest moving strike warrant program. We then completed Japan's largest primary equity offering of the year, with Morgan Stanley as our lead underwriter. And in November, we issued our first perpetual preferred with Goldman Sachs leading the deal. And that opened up an entirely new institutional channel to fixed income investors. 2026 year to date, we've raised another $130 million in a stock plus warrants deal. Each year, we've added new instruments and reached larger, more sophisticated pools of capital. Bitcoin doesn't look like traditional corporate assets. It's a bearer asset with no cash flows, and it's volatile. And yet, it's incredibly powerful if you know what you're optimizing for. We use our Bitcoin in three ways. First, our long-term reserve, 35,102 Bitcoin, never sold. This underpins our entire capital structure. Second, dynamic collateral. Our Bitcoin balance sheet enabled us to raise over $1 billion in straight bonds and credit facilities. The bonds have now been fully repaid. Lenders are simply comfortable extending capital against a balance sheet anchored in Bitcoin. Third, Bitcoin income generation, $55 million in revenue in fiscal year 2025. We deploy capital into volatility strategies where we can get paid to enter the Bitcoin market as a buyer. This generates revenue that supports our interest and dividend obligations. Bitcoin is not static, it's incredibly dynamic. One of the most distinctive things about Metaplanet is our stock volatility. And rather than seeing that as a problem, we've turned it into a genuine advantage. Take our moving strike warrants, the Japanese equivalent of a US ATM facility. Market standard is an 8 to 10% discount to share price. We raised $1.5 billion at zero discount. Our volatility is so elevated that counterparties accept far better terms just to participate. That same dynamic shows up in our stock plus warrants structure. We sold common equity at a 5% premium while simultaneously selling a one-year call option 15% out of the money. Convertible economics with no future obligation. Institutions pay a premium for a package because the volatility makes those warrants extremely valuable. Our Mercury preferreds came in at 4.9%. Our balance sheet and volatility made the conversion option enticing to investors bullish on Bitcoin for the long term. Every instrument I just described exists because of our volatility. We've built a capital structure specifically designed to harvest it. We hold approximately 85% of all publicly held Bitcoin in the Japanese market. Globally, we're the fourth largest listed Bitcoin holder, the only Japanese company in the top 10, and the only company outside of the US. We're proud to represent Japan on the global stage, and we're proud to have inspired other Japanese companies to follow in our footsteps. When you take our Bitcoin holdings and you subtract our debt, we rank number 13 out of some 3,000 non-financial public companies in Japan by net cash position. We sit between Tokyo Electron and Mitsubishi Electric. We've built a balance sheet that ranks alongside Japan's industrial giants, using digital capital that didn't exist 15 years ago. And even with Bitcoin nearly 50% off its all-time highs, we can absorb shocks that would cripple most companies. Being well capitalized, being over-collateralized on the scarcest asset in human history is the strategy. Prior to becoming a Bitcoin Treasury company, we had just over 10,000 shareholders in Japan. Today, that number has grown to over 216,000. And to put that in perspective, roughly 1 in every 600 people in Japan is now a Metaplanet shareholder. Japanese households hold approximately $15 trillion in financial assets, $7.5 trillion sitting in cash, earning almost nothing. Inflation is back, yields are rising, and capital is moving for the first time in a generation. And that capital needs somewhere to go. Metaplanet is building that destination. Amplified Bitcoin exposure for equity investors, high yield digital credit for fixed income investors, $15 trillion. We don't need much of that to make this one of the most significant financial stories of the decade. Our preferred equity program is how we capture this opportunity. Mars, our Metaplanet adjustable rate security, is our most senior non-dilutive preferred. We're targeting a variable cost of capital under 8%, and this is for investors seeking low volatility, high yield fixed income. No Bitcoin correlation, just yield backed by a fortress balance sheet. Mercury, our Metaplanet convertible for return and yield, gives you both. Senior liquidation preference, quarterly cumulative dividends at 4.9%, and full upside through a 1-to-1 conversion into Metaplanet common stock at 1,000 yen. We've issued $150 million so far. And our aim is to become the most attractive fixed income issuer in Japan. Here's the regulatory timeline that matters. In 2024, Bitcoin in Japan was a speculative asset in a regulatory gray area. Today, in 2026, it's a niche corporate asset. We're operating in an environment that tolerates us, but doesn't yet fully embrace us. By 2028, that changes. Bitcoin becomes a regulated financial instrument under Japanese law. The FSA framework finalizes, banks can begin to custody, insurers can begin to allocate, and institutional capital can finally flow in. Japan's 2028 will be what 2024 was for US markets, the year Bitcoin became an accepted financial asset. And that is happening alongside a monetary policy shift. Japan is getting both at once. And the recent election mandate will accelerate this. We see enormous opportunity ahead. We intend to lead using our brand, our balance sheet, and our track record to build what comes next. We're building today for a market that exists in 2028. And when those doors open, we'll be ready. This is the world we're building. Equity investors allocating through common stock, fixed income investors through perpetual preferreds, retail savers through self-custody and ETFs, institutions embracing Bitcoin as an asset they can custody, allocate to, and underwrite as collateral. Our treasury operations are a foundation for something much larger. If we succeed here, it becomes a template for Asia and the world. Corporate treasuries, sovereigns, pensions, banks, insurance portfolios, all of it built on a monetary foundation that no one controls and that everyone can verify. We're early, but look around this room. Everyone here is part of something much larger than just one company. For free markets, for property rights, for economic self-sovereignty. Over the next decade, holding Bitcoin on a corporate balance sheet will not be unusual. It'll be standard practice. Metaplanet won't be an outlier. Metaplanet will be the template. This is from our shareholder meeting last year in Tokyo. Thousands of people on a Monday morning. This is our community, and we're building Japan's Bitcoin standard together. Thank you very much.